Hi everyone. Today let's talk about Fed Bowman's comments, as well as Berkshire earnings and the economic data. Then we'll look at Max Payne for the week and the charts. Then we'll finish up with my positions and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Fed Bowman came out on Saturday and said some hawkish things. She highlighted that she expects more rate hikes, which we've been talking about. We expect at least one more. That is what the Fed has been talking about. But she did highlight more rate hikes or rate increases, you can see highlighted here, meaning that there could be more than one more for this year, which would definitely be a little bit of a shock to the markets. That's definitely not what we've been anticipating. It does seem like Fed Bowman might be the new hawkish Fed member in place of Fed Bullard, who was previously the most hawkish of the group. She did mention that the lower inflation was positive, but that they're still looking for more signs. Moving over to Berkshire Hathaway and their earnings, they were up around 7% year over year for the quarter. Net income totaled $35 billion. Operating earnings up around $10 billion. Everything continuing to go well for Berkshire. They're still sitting on a massive pile of cash at $150 billion. And they also reported $26 billion in unrealized gains from investments, mostly with their gigantic stake in Apple. Wonder how much that got cut down with the recent pullback on Apple earnings. Overall, everything continues to go well. They trimmed their position in Chevron, and this is a new record high for their cash. Moving over to the Fear and Greed Index, you can see we're down to 69. A week ago, we were at 77, and that's just showing that we're seeing more weakness in the markets. We'll definitely talk about that more on the charts. You can see that here on the S&Ps, how extended we are from the mean, sitting down around 4,200 versus the stock sitting up at 4,500. Strength sitting in extreme greed. Breadth decreasing pretty quickly. And I've been talking about that for a while. I think breadth decreasing quickly is very important. Last time we had a rollover in breadth, it was pretty significant down to those March lows. Put call ratio sitting pretty low for the overall markets, but it's still fairly decently high on the S&Ps. And then volatility, you can see that clean breakout. We could have a breakout and a pullback like we had here in February, or you could have a more significant break like we did in March. And you can see the break that we had here at the August high, and then the ultimate pullback into those September and October lows. So you definitely have to pay attention when the VIX is above the 50-day moving average. In terms of safe haven demand, you can see we're in fear, which is interesting. People buying up bonds at a pretty accelerated rate. Yields are pretty good, so people are starting to take advantage of that. And then junk bond demand, still saying extreme greed. Moving over to the economic calendar, we have Fed Bowman speaking at 8:30 on Monday. Interesting, considering her comments recently. Not much on Tuesday. 3-year note auction, fairly interesting. Crude inventories on Wednesday. And then Thursday is the heavy hitter for this week. We have core and headline CPI for August, as well as the Fed balance sheet and initial jobless claims expected to tick up slightly from the previous read. And then on Friday, we have core and headline PPI, month over month, as well as Michigan inflation and consumer sentiment data. And if you notice here, you can see headline CPI year over year is expected to tick up slightly, and I would guess that's going to reflect the jump in energy prices, while core is expected to step just 0.1%. Moving over to earnings just for a moment, there is not very many big names left for earnings, but you have Sony here, Palantir, fairly interesting, Tyson Foods on Monday. Looking at Tuesday, we have Eli Lilly, UPS, SoftBank, Duke Energy. Looking to Wednesday, we have Disney, Trade Desk, as well as Honda Motors, Disney being the big one for the day. Moving over to Thursday, we have BABA. That's pretty much the only one interesting on Thursday. And then moving over to Friday, there's basically nothing important. Moving over to Max Payne for this week, it looks very different than what we've been seeing. Big call wall at 462, and then very little options in the market and no major peaks. Puts sitting down 447, not really high enough to pay attention to. Total options is still fairly decent, up around 900,000, and I would expect that to climb a few hundred thousand over the course of the week. Put call ratio quite low compared to what we've been seeing. And if we did get a move down to the bottom of the calls, that could push us down around $4 or $5, or about a 1% move for the week, down into that 442, 443 area. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see that big red candle down 2.25%, engulf the two previous candles, getting very close to the highs from June, which are sitting around that 445 area. So just a few points lower, that would also put us down to the 9-week moving average, and I would absolutely expect to hit that level before we see any kind of major pullback. If we are going to rally, I would expect a double top or a lower high to set up. The NASDAQ kind of already has that, but the SPY doesn't quite yet. Overall, looking quite weak, sitting right on that trend line, marking the tops from November as well as January. But I was watching this kind of midline, and we did take that out pretty strongly. Overall, momentum looking more bearish, RSI breaking down from overbought conditions, and it looks pretty weak. Moving over to the daily chart on the SPY, you can see bearish momentum, bearish RSI, crossing below that 50 line, volume quite high on that down move, breaking through the 21 and VWAP, as well as these major EMAs closing below them. And at this point, this looks quite weak, looking like a pullback to the 55 EMA, sitting down at 437. Obviously, I don't think that's going to happen all in 1 week. Might get a little bit of a bounce. I would expect sellers to come in and push that back down into that mean reversion like territory. Also have a major level for me sitting at 439.98, so right in that 440 zone. So if the 55 EMA kind of drifts higher as we make our way lower, getting into that zone, it would make sense to me. Potentially mark a bottom in that zone, come in, set up a lower high or a double top, and then we get a bigger breakdown going into the next few months. That would be interesting, but right now you have to respect big gap down, big continuation. Definitely looks quite bearish here on the SPY. Moving over to the NASDAQ on the weekly chart, you can see we also got a big bearish candle engulfing the two previous weeks, very close to that 9 EMA, sitting at 15,192. We're about 100 points higher than that, and it does look like we will get to that level at a minimum. Momentum definitely pulling back, RSI crossing below that SMA definitely looks quite weak in my opinion. You can see just how extended we are off of that 21 EMA, sitting down at 14,135. We're still sitting just on top of these highs from April, which is a decent level for support. We do need that level to break before we get that continuation to the downside. And then my next support would be sitting down in that 14,647 level here on the trend. Moving over to the daily chart, you can see that high, lower high setup that I was talking about. The SPY doesn't have the same kind of setup, but this definitely looks like a culminating topping formation. You can see we kind of had a similar setup here, looking more like a double top, but then we did not take out that midpoint here. You could argue this was a lower high, but it didn't quite set up that way. Now we have a clear break of this midpoint, and it definitely looks weaker. You can see we're getting the continuation now, also below the 9 and 21 EMAs as well as VWAP. We have the 55 EMA sitting down at 363.58, highly traded zone right there. You can see I have a level 364.84 right in that same zone, and I would expect to see a move into that zone before we find major support. Overall, bearish momentum, bearish RSI, NASDAQ looking quite weak. Moving over to the Russell, you can see we hit that trend line, 189.75 once again, pulled back from that level. You can see that was the high here for January. That was also the high here in August of 22. And once again, we're breaking down from that level, took out my 195.15 level. I still think the Russell looks a little bit stronger, but it did engulf the previous week's candle. Does look weak, momentum stepping down, RSI pulling back, but still above the 50 line. Overall, this looks like a giant base, and it could absolutely set up a higher low and then rally through this zone, similar to what happened on the transports. But that doesn't mean that we're not going to get at least a little bit of a pullback in the next week or two. Moving over to the daily chart, you can see that consolidation, tap that level, and then we had a breakdown. Still holding the 21 EMA. We're not below all of the shorter term EMAs like we are on the SPY and the NASDAQ. Certainly could hold this level and then go a little bit higher from there. Momentum is bearish. RSI still holding above the 50 line, but below the SMA. Right now, you have to be a little bit more neutral on the Russell versus the NASDAQ and the SPY. Moving over to the Dow on the weekly chart, you can see we did get a big bearish move engulfing that previous candle. Momentum, RSI, the same things we're seeing on the Dow as all of the other EMAs and SMAs. Still holding up fairly well. The 9-week moving average is sitting down at 344, so that would be a pretty decent pullback down to support. That would also put us down to these previous highs, a pretty decent zone where we could find some support. Does look like mean reversion is going to happen here, however. You can see the level that we rejected off of, marking the highs here in January of 22, and I would expect at least a pull down to 346.27 before we find major support, or the 9 EMA. Moving over to the daily, similar to the Russell, you can see we're still above the 21 and VWAP, momentum bearish, RSI still pulling back. But again, still looks a little bit stronger than the SPY and the NASDAQ. You need that 21 to break if we're going to go lower in the short term. I would expect that to happen at some point. Might tag it this first time, bounce a little bit, and then come through it later. Back down into that 445 area, marking the tops here from June, as well as a consolidation before we had that bigger breakout. Moving over to copper divided by gold, you can see we're still holding above this 55 EMA here on the daily chart. Still holding within this zone, 1927 up to 1922. Overall, still neutralized. Does look like it's slowly curving up here over the most recent couple days, and that is a mildly bullish indicator. Moving over to the equal weighted S&Ps on the weekly chart, you can see we're watching this as a rising wedge, hit resistance, marking the top from January. We've since broken down from that level. 9-week moving average sitting at 149.87, just a few points below where it is now. Momentum stepping down, RSI also stepping down, and I would expect this to pull back a little bit more strongly, at least hitting the 9-week moving average, if not a little bit further back. Moving over to the ratios, NASDAQ SPY and NASDAQ Russell. You can see NASDAQ SPY holding in the zone, continues to chop. Definitely breaking down from this 343 area, but holding trend. They're both kind of falling down at the same pace. Momentum looking to flip bearish next week. RSI also pulling back, definitely looks weaker for the NASDAQ. But overall, those two are moving down together in my opinion. NASDAQ Russell, on the other hand, clearly pulling back, looking to break that 21 EMA next week, potentially pulling down to 766. Russell demonstrating clear outperformance as we saw on the charts. Moving over to SPY divided by the M2 money supply on the weekly chart, we talked about this 2205 level being a key level, marking the all-time highs here before we had the significant pullback. Hit that level last week, moved lower, and we're pulling back from that level. You can see last time we had a pullback, we did end up chopping in the zone, retesting it one more time before we had that bigger pullback into the mid-range. So like I said, could come into the zone, chop a little bit, maybe get a retest or a double top or a lower high setup, absolutely possible, before we get the bigger breakdown. But at this point, I do think we are going to see a larger pullback, especially on this ratio. Moving over to Apple and Tesla on the weekly charts, looking at Apple and their earnings. Big red candle for the week. Definitely not something we've seen in a long time, especially after this massive bullish run that we had on Apple, making all-time highs. And now we're pulling back from that level. We took out my first 3 levels of support as well as trend support. 21 EMA sitting at 177.15 on the weekly chart. My next horizontal support is at 178.58, and this looks super bearish. And if the biggest stock in the world is bearish, generally markets are going to be somewhat bearish as well. Tesla with a bearish candle engulfing the previous one. So we had the big move down on earnings, slight rebound, bigger pullback, taking out my 255.44 level, as well as the 9 EMA closing below that level. Next support for me would be the 144 down at 243.45, as well as VWAP sitting down at 238.76. Momentum pulling back, RSI looking weak, and both of these look weak going into next week. Moving over to Microsoft and Amazon, you can see this chop, big wick, 2 weeks of pullback, taking out that 333.03 level. Next support down at 317.26, or horizontal support here at 315. This looks like a pullback. RSI, MACD showing bearish momentum, RSI breaking down on big volume. So Microsoft and Apple, both of them pulling back. Amazon had great earnings, pushed right up to that 144 on the weekly chart. Holding at that level, we're right at this trend as well. It'll be interesting to see if that breaks. If it does break, we might see a push up to these highs going back to August, sitting at 146.55. And if that breaks, there's actually quite a lot of room to the upside into this previous consolidation. So definitely an interesting level. Looking for a touch of that August high, but even still, it does look pretty extended on this rally. MACD still showing bullish momentum, RSI showing bullish. Makes sense with that push up on earnings. Moving over to staples and discretionary, staples had a big bearish candle. Pretty interesting considering that it seems like we're rotating into safer stocks. Otherwise, looking at the 9 EMA sitting at 74.43, trend support just below that, 74.40 or so. So certainly could find support, rally up, make a new high. That would be interesting. Otherwise, this is a lower high setting up right now. And if this starts to take out this previous lows, we could be looking for a pushback down to 70.85. That would be interesting. Overall does not look great, but still holding bullish trend. Consumer staples, on the other hand, hanging man candle on the week. Could be predicting lower prices to come, but the trend is still intact. You do have to respect it for what it is right now. Momentum looking like it's going to step down next week, looking for that follow through on the hanging man candle. RSI looking to touch that SMA, sitting at 63.41. Moving over to transports here on the weekly chart, you can see we hit that trend resistance last week, broke down from that level right on time. Previous trend, marked previous tops, and we marked one more here, looking to push down to the 9-week moving average at 250.23. Momentum stepping down, RSI hit overbought conditions and pulled back, closing right on the low, and this looks weak. Going into next week, you can see a similar move, hit the resistance, closed on the low, and the next week was a big bearish candle. Moving over to breadth, I think this is probably the most important piece of the puzzle right now. Breadth breaking down in a major way, 50-week moving average, 50-day average moving much lower, 200-day average also moving lower. We have support down at 58.37 at the 55 EMA, also have a level at 58.90, and I would expect to hit that level before we find support. Momentum on both very bearish, RSI looking very weak. 50-day average in a zone where we might find some support on these longer term EMAs. Certainly possible, but honestly I would be paying more attention to that 200-day, waiting for it to get into this zone before we look for a bounce or a lower high setup. Looking at yields just for a moment, we talked about it in the Friday video. Both of these pulled back on Friday, which is interesting. I still think they're going to hold in this zone, if not rally a little bit. They might have just been overbought a little bit, more specifically on the 10-year yield. We'll see how these react to CPI as well as the Fed comments this week. Overall, I would expect them to still hold in this zone, if not rally a little bit. Moving over to the dollar, we also talked about this one. Hit the 55-week moving average, holding at that level at 102. Needs to hold basically right where it is now if it's going to rally off of this level. It also hit the 9-day moving average at 101.84 before bouncing a little bit into the end of the week. Momentum stepping down, RSI looking weak, and this might get a bigger follow through in my opinion. If it does, we might see equities hold up a little bit. If this holds right here and we see the rally continue through the 55 and the 144-day moving averages, that should spell more bearishness to come for equities. Moving over to the VIX on the weekly chart, look at that weekly candle looking very bullish, getting above the 21 EMA, big bullish momentum. Typically when you have a move like that, you get at least one more candle to the upside, and I would expect that to happen, at least pushing up to that 20 level. Like I've said, I do expect more bearish prices coming this week, which should spell a higher VIX at least at some point this week. Moving over to my accounts, you can see I'm down below 97,000. I was doing pretty well up until the last day of the week, and I talked about it in the Friday video. I got chopped up on the whipsaw, which I lost all of the money for the week that I had earned earlier in the week. Overall now I am bearish besides holding some positions on the IWM. I still think the IWM is going to hold up better than the Qs and the SPY, which I did talk about. Qs definitely bearish. I have one call at 375. I expect to make all of that money. I have two puts here at 370, and that is a covered put with these short shares. I do expect those short shares to make money as they continue down into that range around 370 for Monday. We'll see how that plays out. But right now, neutral on the IWM, bearish on the NASDAQ. Let me know down in the comments section what you thought of the Fed comments. Are we going to get 1 or 2 more rate hikes for this year? Or is CPI going to come in super light and we're just going to be done? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.